Okay, so let's just get a bit of a snapshot of like really if you just only had one set of on-chain price models, honestly, I think this kind of does the job. This really represents my like phases of the Bitcoin cycle. True market mean, as many of you know, this is where I think our bear market floor is. As it looks, we probably don't need to touch that anytime soon. That's awesome. MVRV, the average, that's zero standard deviations. It's a long-term average for that particular metric. This is really the bottom, and you can see here it's at 100K. 195, sorry, it's 98, 195. This is, you don't really want to go below that. Only in our chop solidation periods, like at the real bottom of these sell-off events. Once we go below here, the next stop really is the true market mean. That's where we head after that. So in my view, this is kind of the bottom of this modern cycle where we break below short-term cost bases. We didn't used to do this in 2016, 17. We used to bounce off it, kind of a little bit like this, not going to lie. We're trading below it has been a feature of this cycle, and we've been caught by this long-term. And the reason why, this is not just some random price model, by the way. This is like the middle of everybody's average cost basis. It's just where everybody feels like the center of gravity, break even. It may not be their actual break even. There's a lot of people who we could go down to 40K and you'd still be in profit. But this is the zone where like if we came back down to 100, I would say most people watching this, you're not going to be happy about it, but you're also not going to be devastated. You know what I mean? If we went down to 80 or 55, 55 is going to be horrible, right? Now, the 200-day moving average, again, kind of cuts through the middle of all this. The simple framework here, when we're above the short-term cost basis, bullish. Just stay bullish, right? There's no reason to not be bullish because every bullish impulse ever is above the short-term cost basis. Now, notice 2024 and 25, we traded below the short-term. We did recover it, all right? Nice little rebounds as we came out of it. Here, if you just think about a trend's strength, are the bulls in control? Well, if the short-term cost basis is the first line of defense, this is like the first level you have to crack. They failed twice. Sorry, bears, you are on the wrong side of this trade. That is my base case. It also tells me, 1, 2, I don't want to test this thing a third time. If we test this thing a third time and we start breaking below, now we've attempted a polarity shift and it failed, I think that's no bueno. So really, really simple framework here. Really, the rules we've been talking about for Hodler's Wall have not changed. It just looks a lot more likely that we're headed up to the vaulted price at 145K. This is the zone where hodlers are likely to really ramp up selling. So I just feel like we belong at 150. And the difference is, if we had gone from here, right, this is November, December, January, let's just say we kept going. If we got up here to 150K, I think we would have come right back down into this mix. The difference now, notice how all these on-chain models, they all drift higher over time. And I wrote a piece on this, by the way, called Moving Target. Strongly recommend checking it out. But basically, because these are cost basis models, the more people take profit, the more capital comes in to absorb those coins at a higher cost basis, the more we're lifting the average price that people are willing to pay for their Bitcoin. Now, if the average price people are willing to pay is now at 80K, then getting up to 150, that's like kind of profit multiple people usually get. So people aren't going to buy here at, if they're at 80K average cost basis, a lot of them just aren't interested in 100 or, 105, 95. They want 150. They want 200. There's like a certain level that people, like no one's waiting to buy Bitcoin at 10K. You just kind of lose these levels over time. So there is a gradual drift higher. I think, honestly, we deserve a run at 150. If we had gone there straight away, I'd say we would have come back down here. If we go back up to 150 now, kind of think we belong up there and we should stay there, right? The next question is like, maybe we consolidate up at 150, 160, 130 TBC. But I do think we belong up there now, which is a different dynamic to before. So yeah, if the bears couldn't even crack that first line of defense twice, sorry fellas, you are on the wrong side of this trade. Okay, so let's look at the spot dynamics, because actually, you know what? Spot demand looks pretty good. If we look at the spot inflows, it's about